Hi everyone, today let's talk about BlockFi, and then we have some unrest in China, then we'll look at the charts, and then we'll look at my results for the day. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So it would appear that BlockFi also filed for bankruptcy in the result of the FTX issues. Some of their holdings were intertwined with FTX, and since FTX has gone down, I'm guessing that those holdings that BlockFi had with FTX is causing them to go bankrupt as well, which obviously affects the crypto markets and also affected the stock market today. As soon as this news came out, the Nasdaq dropped about $1.50, so almost 1% instantly. Definitely something to be aware of. This came out pretty early this morning, and the markets reacted quickly. They admit here that they had significant exposure to FTX. So as FTX went bankrupt and they don't have any of those assets that they claimed they had, that causes BlockFi to go down as well. This is a similar story to what we thought was going to happen with the financial system during the Great Financial Crisis, but of course this is pretty limited to crypto and unregulated assets, so hopefully this doesn't continue to spread into the rest of the stock market or any other major companies that we need to be paying attention to. Moving over to the China protests, I did talk about this a little bit on Sunday. I saw that it was heating up, and it continues to get worse here. You can see they mentioned the 3-year lockdowns causing Chinese youth unemployment to get to about 20%, which in my opinion is going to affect them in the long term. So if these youth are not getting the kind of employment that they need, that will potentially impact those youth working in the higher echelons in those companies later on in their careers, which could be a detriment to China in the long term. China does have a very long-term view on things, which is why it's kind of surprising to me why they are continuing to react to COVID so strongly now, when it doesn't seem to be having a major impact on the rest of the world, and it seems to me like this is self-inflicted. As a result of this, the markets did pull back. The Hong Kong index fell 1.6%, the Pan-European index fell 0.9%, and you can see here that profits from Chinese industrial companies fell 3% from January to October as they continue to try to stymie COVID. From an investor perspective, we do have to be aware that this will continue to affect supply chain issues. Specifically, Apple was mentioned multiple times saying that iPhone production will not be able to meet requirements, which did cause Apple to go down today, which obviously is going to weigh heavily on the Nasdaq as well as the S&Ps as the biggest company in those major indices. And then the secondary issue there is if supply chain disruptions continue, that could cause inflation to go higher, which might cause the Fed to be a little bit more aggressive than the current expectation. Moving over to the charts, starting with the S&Ps on the hourly chart, you can see we created a double top on Thursday and Friday with the previous high here, and then we sold off from there. You could certainly argue that it's due to macro environment, but technically this is a fair picture as well. And then moving over to the 4-hour chart, I do want to highlight here, I expected this to go a little bit higher and touch this final point of resistance here, but it seems certainly possible to me that this sell-off has begun, and this is the catalyst that we needed to start pushing back to the downside here, and that this could certainly go several more points before we see any kind of bottom. And we've been talking about that for a while. And I'm not sure necessarily that we're going to make new lows here, but it does seem like this bear market rally that we've had over the past few weeks has come to an end, and that this double top might be the end of this rally. Moving over to the Nasdaq here, you can see we did not even come up to that previous level. We in fact made a lower high here, and we're coming back into that previous low here. And if this breaks down here tomorrow, then we're definitely going to be moving much, much lower, possibly into this 269, 270 area. I know I mentioned before, I thought we might find some support in 275, but the new catalyst makes me think that we're going to go much lower, down to 270, possibly retesting these lows here over the next few weeks. So once again, make sure that you keep in mind that this could be the start of the down move, even if we don't come all the way into that previous resistance that we've been expecting. Moving over to the Russell, you can see the structure is still intact. You could certainly find a bounce here. The Russell did sell off more than the other major indices in this case, surprisingly. But again, we're right at that support, and if this breaks down here, then I would expect to come at least to the 144 EMA on the 4-hour, which is currently sitting at about 178.40 or so. And then after that, we're looking at support down around 173. So definitely seems like we're moving to the downside, and that this might be your head and shoulders type pattern here, which would give you a price target basically back down at these previous lows, right around 164 here on the Russell. Moving over to stocks above their 200-day moving average, You can see we came right up to that resistance, a level that we've been looking at here before. It was the previous high in September, the lows here in September of 21. And then once again, coming right up to that point here on Friday, and then moving down here today back to this 9 EMA. This breaks down here, then once again, we have quite a ways down for this chart to move down, which should signal that the rest of the markets are going to be moving down. You can see we were quite overbought here as well on the daily chart. It looks like we're about to get the cross, and if this starts to move down, similar like we saw here in August, it's generally a pretty good indicator that we're going to see some much lower lows. Moving over to Apple, I don't usually talk about Apple that often, but we are here on the daily chart. You can see we've broken below this previous resistance. We have a series of lower highs here, and it looks like this is about to fall off a cliff based on this new macro data. And if Apple is going down, the rest of the markets are going down. And you can expect this to move back to probably 135 at least, if not moving back into this 120 to 124 zone. So I would expect Apple to move down here pretty sharply over the next few weeks. And if that happens, then you should expect the rest of the markets to move down as well. Moving over to top gainers for the day, we actually had a gainer, and that was Lululemon on the day. Did have a green bar for the daily chart. Definitely looks pretty extended here. We're throwing some wicks to the upside at this previous level of resistance and support, which is right about 367. You can see we interacted with that several times here in April. But Lulu has been strong, and this might give you that opportunity that we've been talking about to get back into Lulu if it comes back down into this 313, maybe all the way down to 300 range. Lulu does tend to move quite a bit, but anywhere between 300 and 315, I think Lulu is a buy. And if you can sell puts in that area, you can even get further below that, somewhere around 290 on the puts. I think that's a pretty good opportunity for Lulu, and that's something that I will be watching as Lulu moves back down into these previous areas of support. Moving over to the dollar on the hourly chart, big rally, several green bars here in a row, all the way back up to that previous level of resistance. You can see we've been interacting with this area. Didn't quite get above that zone. Getting over back to the 4-hour chart, you can see where we're at. This bottom of 105.50 or so seems to be pretty solid. And maybe we're going to see a stronger rally here now that we've kind of formed a double bottom, a more solid bottoming process here on the dollar. And if the dollar continues to move up, that is going to be bad for stocks. And then we can start using the dollar as a point of reference for when we think stocks are going to turn around. If this does continue to rally, I would be looking for 109.50 here on the DXY. As that zone, it was previously support multiple times here. And if we get back up into that area, I would expect there to be some selling. Moving over to JNK, you can see the structure has broken down. We've previously been using it as support, and now we've broken below it pretty significantly here, as you would expect. Risk is coming out of the markets. People are looking for more downside. And as you would expect, JNK is moving down as well. We did have a move down kind of like this here in November. This definitely seems a little bit more substantial. Previously, we had that same kind of formation, and then we gapped up really dramatically. But in my opinion, I think this is going to be more solidified, and I would be looking for this to come back down into the 98 area, which doesn't mean we're making new lows here on JNK, but definitely the breakdown of that structure means that we're going to be moving lower, and we should expect the major indices and specifically the NASDAQ to move lower as well. Surprisingly here, TLT did not move down. It did gap up and then move down throughout the day and then bounce here previously. But this rally seems to be intact. TLT might be one of those better investments here in the short term, as we expect it to move back into this 106 to 109 area. And then after that, we're looking for 115 as the next level of resistance. So keep TLT in mind. Definitely looks like a solid move to help protect your money at least a little bit in the short term and perhaps make a little bit as this continues to move higher in this solid upward trend. Moving over to the VIX, you can see we had a huge gap up, went from about 20.50 all the way to 22.13 or so, and then we rallied all the way up to about 22.50 at one point. It would not surprise me if we got a little bit of a move down just to retrace some of that area, maybe fill some gaps, as we did here. So we had this gap here previously. It came in, filled that gap. And it looks like we're going to be moving higher here. I don't know what this structure is going to look like exactly, but with the change in the macro environment, I think that this is going to be a really solid bottom at this point, and that we're going to see a rally back up at least to resistance back in this 29.50 to 30 range. Of course, if the macro environment continues to get worse, this could certainly break out to the upside. which would be an indicator that perhaps we are hitting a more solidified bottom. Moving over to my results for the day, I actually did pretty well considering the positions that I had coming into the day. If you watch my previous videos on Friday, you would see those positions, but they were basically all bullish. I made the adjustment pretty early in the day that I thought we were going to go lower, so I did sell some shares short and sell a couple of calls in here, which made some money as well. And then I actually sold a covered put at 282 for tomorrow just to cover these short shares that I have and potentially buy them back here at 282. Stock is still trading slightly above that, and I already had an open profit of $120 here on those short shares. So this is another opportunity to gather another $1.17 here on that put option, plus the 70 cents if it does move all the way down to 282. So solid position for profit. Probably should have gotten a little bit shorter here today, but I did not. I was a little concerned that this might be just a short-term bounce, a little bit reactionary, which I'm still a little bit concerned about. It was a big move down, but we were sitting in that zone where I thought we were going to move down anyway, and perhaps this is the catalyst that is going to accelerate that move and cut this rally a little bit short. But otherwise, for results, down almost $200 here, which is about 0.2% on this account, which is pretty good considering that the major indices were down about 1.5%. Let me know down in the comments section what you think of my positions. And is the market going to continue lower? Is this the short-term top that we've been looking for already? Or are we going to see a little bit of a push higher in the next few days? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.